Jeremy Harper here. Just want to give you a little update around trust lending. We've seen a lot of movement over the last couple of months with credit policy with banks and how open they are to lending to people who are looking to borrow, new refinance or purchases in a trust under residential lending for investment purposes. So recently we had First Mac, which is a second tier lender, come out and have now stated they require a guarantor of any other entities to list those loans on their serviceability. So that's a big change, and it looks like that's where a lot of this lending is going to go in terms of the bank's credit policy, where they're now saying if you are a guarantor of another trust, we still want to see that loan and that rental income factored into this new assessment. So that's going to unwind some of this current scenario where people have a trust on the side that is taking care of itself, so that the income is taking care of the expenses and the liability within an entity, and it's currently excluded from the current credit assessment. So that's something to be mindful of. So reach out if you have any questions around that. I think the biggest issue I can see already that's going to happen is business owners are going to be impacted. So if you're a director of a trading entity where you have debt, let's say you are an equipment hire company that has $500,000 in equipment finance, you're going to see more and more credit apply that same credit approach and say, we want to factor in all that liability from that entity that you're a director of into your personal borrowing. So that's a watch. I think for some credit teams at certain banks are going to apply quite a conservative approach. So it's going to make, my opinion, lending to business owners potentially harder in the next sort of 12 months whilst this whole change to trust lending unfolds. Got any questions? Please let us know. Thank you.